Hello and welcome to BQ Prime. The Reserve Bank of India has put in a new settlement mechanism in place for international trade, settlement via Indian rupees. The mechanism, and we'll get into the details through this conversation, essentially works through wash-through accounts where exporters and importers can make payments in Indian rupees. There's a provision where some of the export receivables can be set off against the import payables. And there's also a provision that balances in some of these accounts can be, among other things, used to invest in government securities. But what's the big picture here? What are the implications and what is India trying to do through this? Joining us to talk about some of that is Sanjeev Sanyal, member of the Prime Minister's Economic Advisory Council. Sanjeev, thank you so much for taking the time to speak to us.
It's a pleasure.
Sanjeev, I would love to understand from you what the big picture here is. What are we trying to achieve through this? There are two narratives doing the rounds. One, that this has been done in the context of Russia and the payment issues that we were having with Russia, but that there is, of course, a larger goal here as well of internationalization of the rupee, which we've spoken of for a long time now.
So I think the real story is the longer term one. The idea that this is just narrowly being done because of current geopolitics is not quite the case. So this is a journey that started many years ago, and the idea eventually is that the rupee needs to be ultimately a currency that we should be able to treat like a hard currency. We have aspirations as an emerging global power. Then, any economic power then also has a currency that is used widely. It is accepted by other countries, a part of their reserves, ultimately maybe even a part of the IMF's SDR basket and so on. So these are longer term goals that we have, but each one of these you need to take a step. So what you just saw in terms of allowing international settlements in the rupee is one step in that long journey. But do remember that this journey started some time ago. Whether it is, a couple of decades ago when we began to remove capital controls on the rupees, on inflows and outflows. Then over the last 1 decade, very importantly, we began to introduce a inflation targeting mechanism. This is an important part because that enhances the credibility of the rupee and its purchasing power and anchors it. Then through the last few years, you've seen when we dealt with COVID, again, we were very, very conservative about both our fiscal and our monetary policy. We didn't allow money supply, for example, to spiral out as happened in many other, by the way, existing hard currencies. You saw money supply spiking up, including in the case of the dollar. So in some ways, what we have tried to signal is that we are a responsible monetary power. We see that we issue responsibly. It is backed by a responsible state and economic management. So all of these are one brick in the wall at a time that we have introduced. Now we are feeling confident enough to take the next step, which is allow these settlements to happen in the rupee. Now, if it happens to be advantages from some short-term reason, then so be it. But that is not really the overall objective.
Understood. In the near term, though, Sanjeev, and maybe providence or maybe just good timing, there would be a benefit in terms of not just Russia. You take some of the neighboring countries, you take some of the emerging countries in Africa. There are some dollar shortages given the outflows, etc. In that sense, introducing this at this point in time could probably give it a little bit of a leg up, give people more incentive to actually try out this rupee settlement mechanism.
Well, I don't think we can take a very short-term view of this at all, because remember, even if if the regulations change from the perspective of the Reserve Bank of India, it still needs taking up. So importers and exporters have to take it up on our side. Then you need exporters and importers on the other side also to take it up. So this is a long-term rollout. Please don't begin to get too excited about the immediate ramifications of this. These are long-term changes that require many niggling things that will turn up along the way, whether it's in terms of technical systems, regulations, which we will keep smoothening, and through feedback we will keep changing. So yes, I mean, in some specific country they may be particularly keen on it, but that is not why we did it.
Okay, and we also didn't do it from the perspective of reducing some of the dollar outflows. Again, numbers may not be material because a large chunk of your trade is anyway dollar denominated. So even if some exporters and importers do take up this, it would make a very, very marginal difference on any dollar outflows out of India.
Absolutely. Please don't take this up as some sort of a band-aid for any current problem we may be having, or, as I said, do not expect that tomorrow morning, some country is going to shift to the rupee because they all very excited we allowed this. These are long-term changes. They take a long. They have to be done one step at a time. There will be glitches that we will discover. We will fix those glitches, and so on and so forth. But it is a very important step. So, having said what we shouldn't be focusing on, let me say what we should be focusing on. In the medium term, we do need to begin to think about the rupee as a currency that is a part of the mix of currencies that exist and are used widely in the world. Obviously, in those countries we have a lot of bilateral trade, they will be easier for us to establish ourselves. But it does mean that once this currency becomes established, we will be able to have much more easier flow of capital, especially that which is dollar denominated. It allows the government, for example, to raise capital much more easily because, again, it's rupee denominated. There is no exchange rate risk, and so on and so forth. So there are many longer term benefits. There are many people on social media who are getting very excited about somehow the rupee's emergence may somehow, mean the decline of the dollar and so on. This is totally not the case. Do remember that there are many hard currencies already in existence, and not just the big ones like the euro or yen or the pound. There is the Swiss franc, there is the Singapore dollar. So there are plenty of other currencies that are freely tradable, are completely internationalized, and it hasn't in any way dented dollar dominance. So that is a different conversation to be had. I'm just putting it out there. That's not your question, but since
absolutely.
Many people tend to get excited about this, using this as the frame of reference of discussion. Let me point out that is absolutely also not the case.
100%. I'm really glad you did. Let me then talk to you a little bit about what you think drives the demand for such a mechanism. Not today, not tomorrow, not a year down the line. But say if you look at the CNY, which now has about a 3.5% share in international trade, over a period of time, what do you think has driven and pushed up the share of the CNY, and what consequently would India need to do over and above what it's already done to get a mechanism like this achieve its objectives?
See, first of all, there's one which is the friction argument. You don't have to go back into another currency, say the US dollar, and then back out to a third party. So, so there is, you removing one sort of cost friction problem. So that is one part of it. The other is certainty. If we are dealing with another country and everything is being done in rupee terms, if I'm an exporter, I'm paying everybody in rupees, or I'm importing something where it's all in rupees, then why on earth am I introducing an exchange rate into the uncertainty of it all? So now a very small country effectively becomes a price taker. So Singapore, for example, even if the Singapore dollar is freely tradable, etc., is essentially a price taker. You can denominate everything in Singapore dollars, but it's a price taker. But when we are a large enough country like ourselves, we in some ways drive the price ourselves. In those cases, use of the rupee provides a certain amount of certainty and anchoring for any business that wants to function in our larger economic ecosystem. So it may be outside our shores, but if it's something related to us, we are a large enough entity that the pricing of various things can be driven by us. So this is why the rupee is an important part internationalizing of the rupee is an important part of that, so that those who are doing in business across national borders, let's say, Nepal would be a very obvious country where this would have implications. It's a country in many ways integrated because of our borders are next to each other. Labor is completely mobile, and so on and so forth. So, and the Indian rupee does in reality get used quite widely in a country like that, or maybe in Dubai. Rupee gets used for all kinds of things. And we are now also putting in place, remember, the UPI payment systems. So all of this being put in place, then if you're living in a rupee world, why shouldn't you price things in a rupee world?
No, I get that. But from the other side, what drives the demand? I mean, there has to be somebody on the other side willing to take rupee risk, right? Because they are the ones who are taking the rupee risk here.
Absolutely. And this is the reason we had to take the previous steps, that we had to be a credible party issuing a currency, which is why, incidentally, I'm not a big votary of cryptocurrencies as such, because it has to if to be a currency as opposed to a crypto asset, which is a different debate. But if you have to be a currency, you have to be credible in terms of its conversion to certain basket of goods and services. And this is why introducing a credible inflation targeting mechanism, maintaining that credibility of issuing of money, or even of the fiscal side, and so on, or building up large amount of foreign exchange reserves, all of this is a way of signaling the macroeconomic credibility. And that is absolutely critical, because if you are issuing a currency that is to be used, then the other party has to be confident that whatever currency he's buying is something that is a meaningful store of value, a meaningful exchange to goods and services that he or she may buy in future. So that is why doing that work, the inflation mechanism, signaling of macro credibility, all of that needed to be done first. Now, this is just another step. The next step will be to widen its usage. At some very far point in time, we will be able to open it up even further and let it, let it be free, like, remove all the capital controls. But, even now we do have capital controls. So all of this needs to be sequenced one step at a time. But do remember that at every stage, when you do these things, you do give up something. So if you have a completely rupee at some future date, do remember then that at that point in time, we will have to then choose between the exchange rate and monetary policy. The trilemma problem, which you'll be aware of, that if you have free capital flows, then you have to choose between the exchange rate and monetary control, right? That will apply to us.
Yeah,
it already applies to us to some extent, because we do have, with the capital controls, which still quite open. So it already applies to us. It will apply to us more, which is why we needed right up front in the beginning to establish monetary credibility. So I keep coming back to this point, but it is absolutely critical, because without that, none of the rest flows.
Fair enough. Just the fact that we are a depreciating currency, interest rate differentials given prior to this current episode would not scare off people who would want to use this mechanism. As long as the pace of depreciation is predictable, that's not a deterrent, do you think?
See, you have to understand, exchange other hard currencies in the world, the euro and the yen, all of them float around quite a lot. So there's nothing to be embarrassed about exchange rate movements, as long as they are not too harsh. And in any case, as I said, if what you're using it for is denominated in that currency, then it doesn't matter, as long as the inflation rate in that currency is not out of whack. So just to give you an example, right now, as you know, the euro is now almost at parity with the dollar. But if you happen to be living in Europe and everything is denominated in euros, or if you are just in a country in Europe which is outside the eurozone but is, effectively working, everything is being denominated in euros, that doesn't really matter. What matters to you is domestic inflation, right? So therefore, this rupee will become important in the ecosystem and universe where India's economy, or the rupee, is the driving denomination. We are enabling people to, outside of our borders, who deal with India, to be able to denominate themselves in various ways in that same currency. That is why they will adopt it. They're not adopting it. Supposing you were, I don't know, I'm taking random countries here. Supposing you're Argentina exporting and importing with Nigeria, are they going to now be rushing to do this in rupees? Probably not. So
No, fair enough. Sanjeev, one sort of attempt in this same longer story of internationalization of the rupee was the introduction of the masala bonds. Those never really sort of picked up in a huge way. Was that a testament to the lack of demand for rupee denominated sort of risk?
No, there is a rupee denominated risk everywhere. There is an ecosystem that develops over time. That is why I keep coming back to the point. These are all one step at a time ingredients included along the way. Now, at each step, some tweaking will need. At some point in time, you may need a new kind of payment system may emerge out of blockchain technology. I don't know. And then we will tweak it along the way. So, so we are also, remember, nudging this along the way. We know that roughly speaking, you need to establish macro credibility first. So we've done that more or less. Then you need to create payment systems and allow these transactions to happen. Mechanisms need to be created. So that is now getting done. You're freeing those things up. At some future date, maybe capital controls will be tweaked or even further down the line, perhaps even removed. But then by that point in time, hopefully we will have established our financial markets are deep enough by that point. The rupee market is deep enough. The macro credibility is high enough that you can carry on allowing for the trilemma problem and manage it.
Sanjeev, just a couple of quick questions on the bigger picture as well. Treacherous global environment. There are two parts to what's happening on the FX side. One, certain countries are facing dollar shortages. There were some sort of episodes even locally where there was a concern of dollar shortages. And then there is the depreciation in the exchange rate. What's your perspective on both, given what's happening globally in monetary policy, Fed, etc.?
See, first of all, let me point out, as far as our exchange rate management, we have a well-established system by which we basically lean against the wind. That's why we accumulate foreign exchange reserves, and we accumulated lots of it. But there may be time we may have to lean against the wind the other way, as we are doing now, and running them down. I don't think anybody needs to be too excited about this. Now, having pointed this out, let's see, why would the rupee depreciate now? There are two reasons. One is that we need to correct our real effective exchange rate for some reason. That is not the case right now. Our inflation rate is in fact lower than that of the rest of the world, particularly the dollar. So that is not what we are correcting here. Our productivity rate, if anything, is probably growing faster on the long run than the US. But that is also not the reason. What we are really seeing is that there is now a dollar strength that is happening because of a monetary cycle that they are going through. We are hardly the only currency that is going through the depreciation. I just pointed out to you that the euro is heading to parity. Yeah. So in that context, should we be adamant and have a fixed exchange rate against the dollar? My argument is no. You allow it to go, let the market do its job, but as is a well-established principle that the Reserve Bank has had now for a long time, for decades now, of leaning against the wind. So we lean against the wind, and that is why we accumulate foreign exchange reserve. But are we trying to fix a certain exchange rate? No, we are not.
So we don't need to worry about the pace of depreciation of the rupee, right? And I ask in the context that, look, we've had three sets of measures now from the government, the RBI, and even if you leave this out, okay, then two sets of measures. The government imposed, duties on gold, among other things, import duties or increased them. The RBI sort of did some short-term measures, allowing more short-term funds into government bond markets, allowing banks to raise NRE, FCNR deposits. All of that seemed to suggest on the outside that there is some level of concern at the way the rupee is depreciating, which, as you just said, should not be the case. Or is there another reason we are missing? Is there
no. We keep tweaking according to the circumstances, but the broad direction has always been towards opening things up. Now, and as I said, I don't think the Indian rupee stands out in any way in the world we are living in as being particularly, especially under pressure for some reason. It's not. And we have enough foreign exchange reserves to provide cushion for it. So I don't think there's anything particularly worrying about it. But yes, we have historically allowed the market to sort of swing in whichever direction happens to be the case at that point in time, while at the same time leaning against the wind, which is what the Reserve Bank quite correctly is doing.
Is the global situation, according to you, going to get tougher as this hiking cycle goes along, quantitative tightening comes along? And then I'm not even sure how quickly we'll have to start worrying about the US recession and its implications for the local economy.
So, as you know me very well, I am a great votary of not trying to predict these kinds of things, but to have systems in place and the credibility in place to be able to deal with them as they emerge. So, there was no way 2-3 years ago I would have predicted the COVID crisis. There was no way 6 months ago I would have been able to predict the Ukraine war. So the question is our macroeconomic sort of management machinery and protocols capable of dealing with whatever turns up? And the answer is yes. And this is something we have earned the hard way, by the way, in terms, after all, introducing the doing all kinds of things, whether it's an introduction of the inflation targeting mechanism, whether it's cleaning up the banks using the insolvency and bankruptcy code, whether it's creating a good tax sort of framework through the GST. All of these were painful things to be done, which we carried out in the years 17, 18, 19 and thereabouts. And when we did them, by the way, they were quite painful. I mean, introducing all of these measures, all of which, by the way, are deflationary measures. And so we introduced them. But having gone through that, we did establish what are the gain of it we are now getting. Because we now have a tax system that is buoyant and coughs up revenue as the economy grows, which wasn't the case before. I mean, quite apart from the business efficiency part, the buoyancy part is an important part of it. The second part is, as I said, macro credibility of our inflation targeting mechanism. Yes, inflation has now drifted above the 6% mark, but not too far off. Similarly, having a financial system and a financial market that can take these ups and downs. I mean, the stock market may have gone up and come down a lot of way, but it's all been orderly, right? There's no breakdown as such of the system. That is what we really want, that the system works. And we have, I think, by and large, established that the system works. There is depth in the market. All of these things we have worked at very hard to be able to do. So suddenly when liquidity gets pulled out, as happens in any cyclical system, once in a while liquidity will come rushing out. Just like when it goes in, people cheer. It's when it goes out, it's painful. But can the system take it? That is the issue. And I think we are currently demonstrating that yes, our system can take it. There is no financial stress as such in our banking system. There is no real stress in our corporate sector. Actually, our lending year-on-year credit growth is actually up a little bit from where it was a year ago. And there is no stress as such in the system. So that is what really is the measure of our success. My ability to predict the future is not what should be the measure of success.
No, that's not what I'm asking, Sanjeev, but you know global markets better than anybody. And in a situation like this, the wave will hit emerging markets. It may not be an India-specific issue, but if there's a wave of outflows from emerging markets, India is not going to stand.
Let me say that emerging markets and they're emerging markets. As far as establishing macro credibility, maintaining fiscal and monetary control through the COVID crisis, and the state of affairs of in terms of growth momentum and so on, I think we can claim that we are doing better than so-called developed markets anyways. So I think you can't say emerging markets bad, developed markets good.
Not what I said. I said when the wave of selling hits emerging markets, India will be sort of kept separated out.
So look, there have been a large amount of selling of FIIs and they went out. If anything, I would argue with you that Indian equities and so on were being, in fact, sold down to repair for drawdowns in other countries where markets went down too fast and they were not able to sell them off. So I don't think investor confidence in India has anyway been poor. The moment things stabilize, I would argue, we will attract back very large inflows. FDI flows continue to be strong. I think our macro management has stood the test of now almost 2.5 years of continuous battering, and we're still standing. So I think that is what matters. There are emerging markets and there are emerging markets. So, and I think the old dichotomy may now have to be thrown into the dustbin, because there are now many countries which are supposedly emerging markets which have better macro management than supposedly developed countries.
Just one last question, Sanjeev. So on the BOP side, I mean, I think the general prediction, unless things change in commodities, etc., in a big way, is that we would run a deficit of about 1 to 1.5% of GDP. The protection against that is largely in the form of reserves. This issue of adequacy of reserves is, very inexact. And when investors think it is enough or not enough is unclear. But do you think we're sufficiently sort of buffered up, even if we run those levels of BOP deficits?
Yes, I think our foreign exchange reserves are more than adequate for our BOP deficits. The reason you have them is that from time to time you need to run them down. I mean, let's face it. If 3 years ago I told you that we were going to have $590 billion worth of reserves, would you have been happy or unhappy about it? The fact that it went to 650 and came down to 590, fine. But the fact of the matter is there's 590 billion of it. And we are hardly in the global scheme of things, the one country that is, running out in any way. We're still seeing very significant FDI flows. And as the corporate earnings and so on justify, if anything, flows to coming back. So I think broadly we have remained stable. Sure, things could go, difficult things can happen to the world, but I can assure you there are many, many other countries that will go under before we come anywhere near India. In the list of countries with problems, I don't think we are anywhere near the one that you would be concerned about.
That point is taken. Sanjeev, thank you so much. I appreciate you taking the time to explain to us the bigger picture, but also this new mechanism that's been put in place. Sanjeev Sanyal of the Prime Minister's Economic Advisory Council. Thanks so much.
Thank you. Right. Bye-bye.
Bye-bye.